So building credit from scratch can be a little tricky and a little bit frustrating. It kind of reminds me of this meme. When applying for an entry-level job, they're like, I need to get this job to get experience. And they're like, well, you need experience to get this job. It's kind of a vicious cycle, and credit can work the same way. It's like you walk into a bank and you try to get a credit card, and they're like, well, you need credit to get the credit card. And you're like, I need the card to build credit. But there are a few very easy, non-expensive ways to build credit quickly that you don't have to go in debt for. So let's jump into those. Really quickly, before I get into the tips, I feel like it'd be doing you a disservice if I didn't explain how credit was calculated or how the three bureaus calculate your credit score. The last thing that you want to do is start building your credit and then you misuse it in some way because you don't know how they calculate your score, and then you end up with bad credit. Remember, no score is okay, a good score is okay, but a bad score can cost you thousands of dollars over your life and be hard to recover from. So it's easier to avoid that than it is to recover from it. So how they calculate your score is broken down into 5 basic categories. Only a couple of them do you need to actively remember. So the first one is going to be your payment history. That's going to account for about 35% of how they account for your score. It's going to be the biggest way for them to calculate your credit is how well you make payments. So making payments on time is going to be the biggest way that they calculate your score, and it's going to be the most beneficial to you. Now remember that for most things like mortgages, car loans, credit cards, if you have a late pay, they're going to charge you a fee, but it's not going to calculate on your credit report unless it's 30 days late. So you have a little bit of leeway. Yes, you're going to pay extra fees, but if you have to pay it late, make sure that it's not 30 days late. Make sure you pay it before that 30-day mark, and it still won't report on your credit report. The second category, and the second one that weighs the most on how they calculate your credit score, is going to be your credit usage. This just refers to how much of your credit limit you have being taken up. So for instance, let's say you have a credit card with a balance or with a credit limit of $1,000 and you charge $300 on it. You're now going to have a credit utilization of 30%. So as a general rule, you don't want to use over about 30% of your total credit available to you. So if you calculate all your debts, all your cards, your credit cards and all those, and you add them together, you don't want to go over about 30%. Going over 30% isn't going to instantly kill your credit score or anything like that. It's just carrying balances over 30% or utilizing too much of your available balances will degrade your credit over time, but it won't instantly take it away. Like if you go over 1 month, it's not going to instantly kill your credit score. It's just going to degrade over time if you keep carrying those balances. Now, the third category is going to be the age of your accounts. This is going to calculate for about 10% of how they calculate your score. Now, if you're new to credit, obviously you're not going to have this, but you're not going to have a bad history either. So the longer that you have accounts open and the more payments that you make, let's say you go to a bank and get a new credit card, every month that you make a new payment and every month that you have that card open is extending your credit history. So typically when we are building new credit, we like to say you go and get 1 or maybe 2 cards if you can. We'll talk about that more in just a second. So you try to keep them open as long as you can without going and getting a bunch of new debt. So for instance, if you go get a new credit card, you have that for a year, and then you go get a car loan and you have that for a month, you now have a credit history of about 6 months. Because one is brand new and one is old, your average credit history goes down. So we typically recommend that you keep an account open for a while and you don't continuously shop for new debt until you have an established credit history. Again, this is only going to be about 10%. So if you go and get a car loan, it's not going to degrade your credit for a long period of time, but it might temporarily drop your score. And again, this is just something to keep in the back of your mind. You're going to build credit over time. There's not really anything that you can do to change it. It's just don't close your oldest accounts for new accounts and you'll be fine. And the fourth category, and again, it's going to equal about 10% of your score calculation, is the credit mix. It's going to be something that, again, that you're going to do over time. And what it is a mix of different types of credit. So a mortgage is one type of credit, a car loan's one type of credit, a credit card's one type of credit, and a student loan's one type of credit. The more mix that you have, like if you have a mortgage, a car loan, and a credit card, it's going to weigh heavier than if you just have all credit cards to an extent. Again, it's not an exact science, but generally speaking, credit card companies, or when they're trying to calculate your score, the FICO companies, like to see that you have multiple different types of credit. Just starting out, I don't recommend that you go and get a bunch of different types of credit. I recommend starting out with one or two of the next things that we're going to talk about and how to build your credit. But eventually, you're going to get other things like car loans, credit cards, and mortgages that are going to help weigh as a better score for you. And this is how you get from, like, say, a 700 credit score to an 800 credit score over time. And then the last way that the credit bureaus calculate your score is through new credit inquiries. This is why I tell people to not go out and apply for a bunch of credit cards all at once, especially if you don't have a long established credit history. And that's because if a credit bureau or the credit bureaus see that you're applying for a bunch of new debt all at once, they're going to weigh that in, and it's going to look like you're trying to take out a bunch of new debt. And so it could temporarily drop your score, especially if you're new to credit. So again, just apply for what you need at the time. So don't go and apply for credit cards just because they give you a discount. Be very methodical about it and only get what you're going to utilize and only get what you need. So a quick guide. Make your payments on time. If you can't make them on time, make sure that they're no more than 30 days late. Don't utilize over 30% of your available credit limit. Don't take out a bunch of debt all at once. And the other things will fall in line over time, and just be patient and your score will go up over time. All right, so now how do you take that information and start building credit with it? Just starting out, you're probably not going to get approved for a bank credit card or like a major credit brand credit card, because those are gonna usually require at least like a 640 to 680 credit score. But you could get approved for a secured credit card. So that's tip number one, or way number one, is to go and apply for a secured card. So what a secured card is it's usually issued by your bank or your credit union. It acts exactly like a credit card, and it reports on your credit report. The difference is that you have to pre-fund it. So basically you go to your bank, they're going to request like $100, $200, $500, usually under $1,000. You can negotiate that. But you give them, let's say, $500. They're going to issue you a card with a $500 limit on it. You can then use it like you would a credit card, and your bank reports it every time you make a payment onto your credit report. One of the major advantages of doing it this way is that you can't spend more than what you gave the bank. So you can never go into debt doing this. So you spend a little, pay a little, and over time, they're going to report it on your credit report, and it's going to look like a positive payment history. Tip number two is to become an authorized user. Let's say, for instance, you don't have any credit, but you have a spouse that does. They could put you on their credit card or a loan that they have as a user, and now that loan's payment history starts reporting on your credit report. You want to be very careful though here, because if you choose the wrong person, or if they're not very good at paying bills, then you're going to have a negative credit payment history or a bad payment history on your report, and you could instantly have bad credit. So you just want to make sure that the person that adds you on their account has a good payment history. If you don't have a spouse, then a family member or a significant other could add you on their account. Again, I would use this as kind of a last resort, because relationally it can get squirrely. If you start asking people, hey, do you have a good payment history on any credit card or car loan that you can add me to? That's where it can kind of get weird. But if you trust the person and they do have a good credit history, this is a great way to add their history onto yours and instantly get a good credit score. Tip number three is to apply for a credit card from a store. Like I said earlier, the major brand credit cards or bank credit cards are often going to be a little bit more strict on credit score requirements. So you can go to different stores and apply for their credit cards. It's going to be able to function like a normal credit card and build your history. They just might have more lenient ways of issuing you the card. What I would do is I would ask the store prior to them pulling your credit, because you don't want to have, like I said earlier, you don't want to have a bunch of new credit inquiries on your credit report. So I would research a few stores or ask a few of the stores that you're interested in what their credit requirements are before they pull your credit. and only apply for those, because you only need one or two to start building your credit. Now, one of the downsides of this is that the store credit cards can often carry a much higher interest rate. I'm talking like 20 to 25% or more. And so you want to be very careful, and you don't want to use it a lot. Just use it like a couple times a month or once a month, and then pay it off immediately so you don't incur those interest payments, because paying 25% interest is not fun for anyone. So tip 4 is to have alternate credit report on your credit report. So things like utility bills, cell phones, rent, car insurance, internet bills, all of those are not reporting on your credit report, but you can call those companies and ask how you can get them to, or if they will. Sometimes they might charge a monthly fee. It just depends on the company. Hint, if you have a bad payment history, don't call them. You don't have to have them report that on your credit report. So ideally, you could have a cell phone, your rent, your secured card, and all your utility bills reporting a positive payment history on your credit report. And this is how you go from 0 to 700 credit score in just a couple of months. If you have a bad payment history or a low credit score, check out this video. I go over some tips on how to start rebuilding your credit as quickly as possible to get you over that 700 credit score. All right, guys, I've had my say. Now it's time for you to have yours. Do you have any questions about credit? Would you like to see any more videos like this? If so, comment down below. And if you got value out of this video, please hit that big red subscribe button, and we'll see you on the next one.